Hey everybody, Josh Sigurdson, World Alternative Media here, and I am joined by WAM's latest contributor, Tim Picciott, all the way from Arizona, and of course he's of the libertyadvisor.com, and we're going to get into his arrival here at WAM soon, but first there's really big news happening right now regarding, well, Trump intervening in Fed policy again, or talking about the Fed, and we've gone over this before. Presidents don't have a whole lot of say in the economy, and I mean, it's kind of like a battle of what kind of centralization, what kind of cancer is best for the rest of us to be enforced on. So I want to go into this Zero Hedge article before we go deeper into the subject. And it says, yields dollar slide as Trump calls for QE4. And as the article goes into, before any Fed officials get the idea that Friday's stronger than expected headline jobs number, which, as we pointed out, actually masked signs of pervasive weakness in employment in wage growth, might justify raising interest rates again in the not too distant future, President Trump slammed the central bank during comments to a group of reporters in Washington. Instead of sticking with its pause, Trump said the central bank should instead drop interest rates, something that markets have already priced in, adding that the central bank has really slowed the American economy. Setting aside the cognitive dissonance between these comments and Trump's repeated claims that the U.S. economy is doing really, really well and that companies are preparing to announce that they're coming back to the U.S., Trump's comments show that he won't let up the pressure on Jerome Powell after reportedly trying to replace him with Kevin Warsh and declaring Powell one of the worst hires of his administration. And I quote, "I personally think the Fed should drop rates. I think they really slowed us down. There's no inflation. In terms of quantitative tightening, it should really be quantitative easing. You would see a rocket ship. Despite that, we're doing very well." On the subject of the U.S.-China trade negotiations, Trump said he didn't want to predict that a deal would happen and defended his decision to tweet a video mocking Joe Biden's history of inappropriately touching women, saying he didn't see Biden as a threat. He also said that he wouldn't be attending the White House Correspondents' Dinner because it's too negative and that he would be holding a rally instead. Trump's rate cut comments were echoed by Larry Kudlow, one of the top economic advisors, who said during an interview Friday morning that the U.S. economy could do with a rate cut. Trump's comments provoked an immediate response in yields and the dollar. The administration's calls for a rate cut come after the yield curve briefly inverted last month, which economists worry could portend a recession in the indeterminate future. Of course, Trump didn't always feel this way about the virtues of loose monetary policy, and you see this Twitter post from, I guess, 2011 that says, "The Fed's reckless policies of low interest and flooding the market with dollars need to be stopped, or we will face record inflation." Now that the president has officially started the conversation about QE4, how long until mainstream economists follow suit? And of course, we recently covered his comments here at WAM regarding lowering interest rates and, his push for Stephen Moore to be on the board and Herman Cain and all that kind of stuff. And I just find this kind of funny because, you have a lot of people on Trump's side that say he's battling it out with the Fed. And it's like, in what way to, have it his way, to have the economy centralized to his perfection rather than the other sides? I mean, it's basically like choosing between Democrat and Republican. Tim, what do you think about this push to print more currency?
Well, thanks for having me on, Josh, and you definitely give me a lot to work with on this. And I think one of the things that has frustrated me most about the president is that when he was a candidate, there were so many things that he was saying that would probably definitely jive with myself and a lot of our listeners over here, viewers, and such as whether it was the unemployment rate. There was a presentation that I gave. It was the first video that we released on the channel from last Saturday in Arizona, where I detailed the 19 different times the president said that the unemployment numbers were fake or phony. And just one of those quotes right here is from May 24th, 2016, and this is the president. "You hear a 5% unemployment rate. It's such a phony number. That number was put in for presidents and politicians so that they look good to the people." And I'm not going to keep going on with that, with the bad Trump voice.
It wasn't bad.
What was that?
It wasn't too bad.
Oh, it wasn't. It was great. But anyways, what really frustrates me is I actually put that into a meme a little while back, and I didn't attribute it to the president. And everyone's like, F you, you damn libtard. And then I'm like, yeah, that was actually the president who said that, not me. And same thing with the Fed. I believe there's another quote that you can probably dig up where it was in regards to Ted Cruz, where Ted Cruz missed a vote on an audit the Fed vote. And lo and behold, Donald Trump, he tweeted out something to the effect of, such an important vote. Like, I can't believe he missed it. Like, we need to audit the Fed. And now it's pretty much business as usual. And to be fair, I mean, he is in sort of in a rock and a hard place. And this is commentary that I had, pretty much from day one, even before he was in office, where I said, listen, if he were to come out and actually tell the truth on what is happening, it would absolutely tank the market. He would get the blame. But in my opinion, the worst thing I thought that he could do was to basically take credit for everything that's going on, because now the quote unquote, free market is going to end up getting the blame once all this ends up unraveling. But to me, if you, supposedly, he's done all these great things, but if you, and it's great, you can do a whole bunch of great things, but if you don't fix the Federal Reserve, and by fixing, ending it, you don't fix cancer, you get rid of it. If you don't end the Federal Reserve, none of this even matters. So, okay, great. What if Democrats get in 2 years, or what if they get in, 6 years down the road? It's not going to matter. And at the end of the day, the debt is getting bigger, the government's getting bigger. And, you can say what you will about President Trump, but my metric is will the government be bigger or smaller at the end of the term? And it's going to be not even just counting inflation, but there's massive increases in the rate of expenditures going on. I believe it was 77% increase in the deficit just in the first 5 months of this fiscal year. And you got to ask yourself, how much longer can that possibly go on? And this is also very frustrating, is because this is something I've been documenting well over a year. And it was everything I was talking about was coalescing with everything that's basically was going to start going on in October. Because October, what you had was, I was calling this a perfect storm. I even had a presentation from last May, a podcast. It's only 8 minutes long. You guys can check it out, where it was called A Perfect Storm. And it was all about all these things coalescing together. One of the things coalescing together was going to be come October, was when the $50 billion a month is when it. So what the Fed was doing, just to back things up for people, is they were, I think, rolling off like $10 billion a month off their balance sheet. And every quarter they were increasing it by another 10 billion. I believe it's somewhere in that number. And it peaked at 50 billion. Well, that peak was October. And so I knew that you had that coming together. At the same time, you had Jerome Powell on October 3rd saying that we were on autopilot. You also, in terms of Federal Reserve rate increases, you also had the European Central Bank saying that they were going to stop printing money in December. And so I'm taking a look at things and I'm thinking, well, how are you going to finance this deficit when you've got the Federal Reserve says they're going to sell essentially $600 billion of bonds go off their balance sheet? Then you've got the Treasury that's going to have to issue probably at least probably about $1.5 trillion, potentially even $2 trillion worth of Treasury bills. And who's going to buy them? I mean, and so that's going to automatically then force the rates to go up. And it's the rates going up that I thought was going to then shellac the stock market. And I came out with a presentation that I made January of 2017 called The Trump Effect, and why good news is bad news. And the entire premise was that everything the president was doing would, in terms of tax cuts, or this is before he was even in office. Technically, I made it right as he was coming in, and the prediction was, well, he's going to do things. I mean, certainly compared to Hillary, to make the market go up in terms of tax cuts, and then all the good news would mean that now the Fed would lose the excuse to not raise rates anymore, and that losing that excuse would then pop the bond bubble with the interest rates going up, which is why I called it why good news leads to bad news. Now it's why bad news is leading to good news. And I also had a client video that I put out on December 28th, and it was called "When's the Next Rate Cut Going to Be?" December 28th, and I then put it out as a podcast in January. So I mean, all the proof and record is there. And so nobody was talking about rate cuts in December. I mean, and nobody was also talking about all the perfect storm that was going on either. And so it's just so frustrating from my level, from your level, from John's, probably from a lot of people that are watching this right now, to see, people that, aren't Monday morning quarterbacking this. They're seeing this going on. And then to his point about Jerome Powell, well, who's the one that put Jerome Powell in there? It was Donald Trump that put Jerome Powell in there. Yeah. And he is basically a clone of Janet Yellen. And this was something that, when he did that move, I I complained about that, very heavily. And everyone's saying, oh, you got to trust the plan. And I mean, my initials are trust the plan, and I don't trust the plan. And, here it is, like almost every single time that I had a major disagreement with the president, we've been right, whether it's, Gary Cohn being put in as the economic advisor, whether it's, all these other, clowns that are in there. And so, probably a lot longer answer than what you wanted, but it's just so frustrating being able to see this from a mile away, because the only way they're able to get this whole charade going, keep this whole charade going, is by cheap money. And so, it's pretty much inevitable. The only thing I was surprised about is how little time it took for the rates, for all this perfect storm to come together before there was a complete acquiescence and reversal from the Fed. And that even shocked me. And now it's more shocking to me is that anybody still puts any credence to what they say, because they've been wrong for so long. And definitely recommend you guys check out the presentation. I believe it's called Greatest Economy Ever. It's the one thumbnail that looks different than all the rest, because I didn't know what I was doing. So make sure you guys check it out. In my opinion, I thought it was a great presentation. And it's definitely, a lot you guys can learn from that, especially seeing where we've been in the past.
Yeah, absolutely. And I do think that it's just come to this point of fruition where everything's starting to bubble up to such an incredible level that it's hard to ignore. And like we were calling the yield curve inversion for a long time. And let us remember, everyone, that the 10-year government bond is inverted with the 3-month, which is not child's play. This is huge. And this is a huge indicator of a recession. Of course, the Fed is going to continue to print money. This idea of lowering interest rates, let's remember how far down interest rates have dropped off every single financial crisis, and in between as well, how far down we see these massive drops, between 5 to 10%. There have been cases where it's much more so back in the 80s, of course. But going forward, Tim, do you think we're going to be seeing negative interest rates anytime soon? Because, I mean, we've gone over this with John a few times, and it looks like it's heading towards a cashless system. We see this in Japan and Sweden. What do you think?
I mean, I never want to, underestimate the foolishness of the Federal Reserve. So I'm thinking to myself, that's a really stupid idea. So yeah, it sounds just about right. Something that they would do. I mean, then if you want to go back and ask, if you would have thought, I mean, I forgot exactly when, Japan started going negative, but it's not even just Japan. It's Japan. I mean, Italy even has a negative, I believe, their short-term bills are even negative right now. And, a bunch of other countries are negative.
Sweden, yeah.
And it's been going on for a while. And so, I guess never underestimate the stupidity of people out there. But why that's important for some of your viewers that are out there, especially ones that are close to retirement, is something called interest rate risk. What that means is when the rates go up, the underlying values of the bonds go down, sort of like a teeter-totter. So if you have a 10-year bond that's, let's say it's, paying 3%, so you got $1 million, it's paying $30,000 a year in interest, rates go up 1%, the underlying principal then goes down to $900,000 if you were to try to offload it immediately. Now, if you were to hold on to it for 10 years, and yeah, you get your depreciated money that's not even going to be worth anything back. However, it's just something that people don't even think about. And another thing that, and I don't know if this is a quick little aside, but I happened to have a client send me the other day his some information about his pension. And what I noticed in there, and this is something that I'm pretty up on all this stuff, and even I didn't know this, but the government made a law. Yeah, that's a good thing. Let's make a law. In 2014, I think it went into effect for 2015. It had a very Orwellian name. I don't have it in front of me, but it's something like the Moving Ahead for Progress for the 21st Century bill or something like that. And what was in the bill, and this is shocking, is that pension funds, how they calculate their solvency, how they calculate the forward expected return, what they were doing is they were using a trailing 24-month, I believe, LIBOR rate to estimate what their future bond returns would be. Now, this is the law. The law now says they have to use a trailing 25-year rate on what the interest rate would be. And then I've got the IRS tables that go over this. So long story short is the pension funds are using assumed bond rates of 6-7% returns right now. And it's the law, and that's what they have to do. So all the pensions that are already massively underfunded, that's underfunded using their BS calculations, their BS numbers. And that even went over my head in terms of, I didn't even know that that was currently going on, because I already was calling BS that all these pensions are eventually going to belly up anyways. And that was also part of the presentation, getting into the numbers and solvency of that. But it's just one more thing. And it's just, that's just one more thing that they don't need. And so there's no way to get out of this. And, we've got, $22 trillion of debt. The debt doesn't include doesn't include Social Security, doesn't include Medicare. That's a much bigger obligation than Social Security. Doesn't include any of the, unfunded healthcare, liabilities. Doesn't include, any crazy crap like Alexandria Ocasio-Cortez is going to dream up. So yeah, and she even said that the way we're going to fund the Green New Deal is going to be through the Federal Reserve. And so, for me, it's sort of astonishing, because the Federal Reserve is the mechanism of high-tech slavery going on in this country. And so now you've got, basically the Democrats out there who are basically, advocating for more slavery.
Yeah.
Because the dollar, a bond, the root word is bondage. We're getting ourselves into complete bondage. We're getting the noose around our neck tighter and tighter and tighter. And so what really frustrates me about all these Trump people is that they, oh, look at this. We had, 1/4 of the GDP was 4.2%. Oh, wow. That's so great. Obama, everyone knows I don't like him, but Obama had 1/4 that was 5.1, followed up with a 4.9. So if you go on who's had the best single quarter GDP, I hate to say it, but it's actually been Obama. And, what did we get for increasing the government, by 77% the deficit? It's, oh, great. We got a tiny, eked out a tiny bit more GDP. And so as a financial advisor, if someone was coming in and they were, let's say, making $100,000, but they were, $200,000 in the debt, and then next year they're making like $103,000, but now they're, $300,000 in debt, I would say they're worse off, but the government would say they're better off. Mm-hmm. And the government would actually say, let's say they were spending $100,000 a year, and now they said, okay, next year we're only going to spend $102,000, but we were planning on spending $105,000. To you and I, that we would say, okay, well, the government increased their budget by $2,000. The government version of it is, well, we really wanted to spend $5,000, we're only spending $2,000, so we actually cut $3,000, even though they increased it. And these are all the games they play. I wrote a book on this stuff that's free. You guys can get on my website. It's called How It's Rigged: The Economy, and that part's not even in there. I need to get some more time and do this stuff. But yeah, I think they're going negative eventually. Depends how things shake out with the Fed. But just like, zero hedges, their acronym is, our slogan is, on a long enough time horizon, everything goes to zero. And on a long enough time horizon, I think the Fed is going to go below zero. I don't see it happening, soon. It's probably going to be, I'd say probably 3 or 4 years from now, they might be going negative. But that is the real fascism. You've got Bank of Japan that takes money, prints it out of thin air. Then, so that's the state. Mm-hmm. They then take the money to then buy their corporations through the stock market. And so that is actual fascism that is going on. The state and corporate merger, yet nothing.
No, people are distracted by the real realities of fascism and communism around the world. This epic force of collectivism is cancer that's growing everywhere. And as our friend Alan Greenspan says, if in debt, just print money. And that's what I wanted to get to at the end of this story here with you, Tim, was that I've noticed that there's a lot of confusion or, conversation anyway, regarding where this is going in the end, how it's going to collapse. Are we going to see hyperinflation, stagflation? Are we going to see, how is this all going to end? Because obviously the US dollar is a world reserve currency. A lot of people are looking to China. China's set to surpass the United States in the coming years for sure. And that's also not very good either. We don't want to pick empires, but that one's definitely not good because we have social credit and giant centrally planned cashless system. But I wanted to get your thoughts on where you think this is going, because I find it difficult to imagine hyperinflation necessarily as the end point for the US dollar, more like just an immediate collapse due to people realizing that there's no faith left in the US dollar. What do you think?
Well, one thing that makes it hard to predict exactly how things are going to shake out is you can know all the information and then still be wrong from like a market timing perspective. Mm-hmm. And what I mean by that is, let's say, you had inside information that the I forgot who it was, whether it was, I think it was Moody's that downgraded the government. I think the date was August 3rd, 2011. Let's say it was, July of 2011, and your brother-in-law works for Moody's and says, hey, I got some inside info. I know that they're going to downgrade it. Well, I mean, I'm a financial advisor, so I couldn't, act on this. And I guess technically make the legal disclaimer that, you can't act on this stuff. And, but anyways, what you would have thought was, okay, well, now the U.S. government is less creditworthy. So now it should require a higher interest rate, because since there's less of a chance of me getting my money back, I should require a higher coupon payment. And actually what happened was people then panicked and actually put their money more into bonds, and the rates actually went down. And so you almost got to act like, and just like what's happened recently, and we went over this in our presentation, with the stock market absolutely soaring at the beginning of this year. And you're probably thinking, okay, well, the earnings are probably getting better. Nope, those have gotten worse. Okay, you're probably thinking earnings per share, those have probably gotten better. Nope, those are actually negative. You're thinking, okay, well, probably, the first quarter GDP, that's probably looking really strong. Nope, that's at I think 1.4, revised up from as low as 0.2. And you're thinking, okay, well, maybe we ended the year strong. No, we didn't. It was actually another very low GDP print of 2%. And so, all this bad news, but the bad news meant that the Fed wasn't going to raise rates, which was then leading to the good news. And so in a worldwide global economy, and since we don't live necessarily in a vacuum, if the other countries are even worse off, especially like the EU and some other places, then people can then park their money into, and there could be this, I think paradoxically, there will be a time frame when the dollar will actually strengthen, which is actually a lot very counterintuitive to probably a lot of people listening to this right now. But there will be probably a window of period. I don't know how long it's going to last, but the dollar will actually strengthen because people will then do the wrong thing at the absolute wrong time. And so, part of my strategy of what we're running, and I made a video, again, I did mention I made a video October 2nd detailing how I was investing our clients' money. And what we did was put a little bit of the capital into put options. Those put options then sort of act like insurance. So if, you have homeowners insurance and your home burns down, then we build your house back. But if your home doesn't burn down, then you lose the insurance premiums. And so we were sort of positioning things where we were going to benefit if the central banks print trillions of dollars, we would see our assets go up minus the price of the insurance or put option, so to speak. And if the things were to absolutely collapse, then we would only lose a very small percentage. And so during October, November, December, our clients' almost had hardly any volatility at all in their portfolios. They're down just a tiny bit. But, compared to some other people being down 20, 30, 40, 50%, if you were in some of these, Facebook, Apple, Amazon, Netflix, Google type stocks, we fared very well. Our clients were, not calling us with any concerns. They were, sleeping fine. I was sleeping fine. And so we've got things managed in such a way where really, I could, go to Africa with you for 2 months and not really have to look at my client's portfolio, because I know that, things are set up in such a way that I feel very comfortable. But it's just such a weird time horizon. There's so many things that can trip people up. And so if people do have access to it, I would, and maybe we'll post this on your page at some point, would be my Dollar Vigilante presentation from Acapulco this year, that I went over the 7 big retirement risks that are out there. And so we'll have that up there at some point. Another video we'll have at some point is I did an interview with probably the leading retirement income expert in America, Tom Hegna. And so the great thing about this channel is we get to pick the minds of these experts that are out there, because no one has a crystal ball. No one's going to know how it shakes out. But but there's only 3 things that the Fed is really watching right now. They're watching, or 3 things that they can save. And that's either the stock market, the bond market, or the dollar. And so right now they're trying to save the stock market. So by saving the stock market, I'll use save in air quotes, they're going to print a whole bunch of money, or they're going to have to lower the interest rates, which is what Trump is hinting at and this whole article is getting at. Mm-hmm. And so, but by doing that, you can then, you're then weakening the dollar hypothetically. And then you're also, and so there's no way they can save all 3 is what I'm getting at. And so maybe they can save 1.5, maybe they can save 2 if they're lucky, but one of those legs is going to go. So we've got things set up where basically, no matter how this really shakes out, as long as it's not flat, that we're set up for our clients to be able to win throughout this. But it depends on a lot of different factors individually, what you should do with your own money. But it is a very, very tricky time span. And the one major thing I'm watching out for now, especially, when it comes to my clients who are close to retirement, is watching out for sequence of return risk. And that is, it doesn't matter what your average return is. It matters what the order of your returns are. So if you average 10% a year, that's great. Except, if year one, you're down, 60, 70%, then you're screwed. And you're even screwed if you're only down 30%. If you're taking out you're taking out 4% a year to live off of, market goes down 30. I believe it's 62% is what you have to go up the next 3 years to get back to even. And so by then people are going to crap their pants. They're going to sell everything. So I just see this big shellacking coming for people as retirees. And then you're going to see, and people don't have anything. They don't have anything to lose. And so, they'll probably keep voting for all these, crazy politicians, like the Ocasio-Cortez's. I mean, luckily she's, a little bit too young to be president next go around. But who knows? By 2024, I think by then it's going to be complete socialism. And it's and one thing David Icke said at Anarchapulco is if you can see the destination, then you can see the journey. The destination is there's no way to pay Social Security, there's no way to pay Medicare, there's no way to pay any of these unfunded obligations. And so we're going to have to print. We're going to have QE 4, 5, 6, 7, 8, 9, 10. Yeah. We're going to print trillions of dollars, and that's what's going to happen. And so. If you're close to retirement, to give a quick plug to myself, you can head over to thelibertyadvisor.com or innovativewealth.com and get a hold of myself because this is a very tricky time period. And if this isn't something that you live, eat, breathe, sleep, then, it's going to break my heart seeing a whole bunch of people who are going to lose a bunch of money, but there's going to be people who are going to make a bunch of money too. And so it might as well be us and might as well be the good guys. And It might as well be people who, didn't have their head in the sand the whole time. So.
Yeah, and I find it interesting that I've always found it interesting that there's like an age kind of restriction on being president. I think the best president would be like 1 or 2 or something. That would probably be the best situation we could all have, just a baby president. Anyway, that's probably the next big movie hitting Hollywood. But I wanted to go into a few of the solutions because I do believe that there are more solutions and there are problems. It's just the fact that we need to be scared. We need to see the bad problems before we can, make the arrangements to make the solutions. And I think that many of them are just based in the very principle of individual responsibility and, being able to educate yourself, research this stuff, take the proper precautions, protect your purchasing power. And of course, people will say, well, you can't eat gold and silver. Of course not. Then that's what, food, water, shelter is for. And, being able to defend yourself is for. And of course, blockchain infrastructure technology and cryptocurrencies that are decentralized and have fundamental value, a reason to exist, good use case, ways to keep things private, other cryptocurrencies that focus on transparency, a good mixture, diversification, and all that. And I think there's so many examples people can look into. The crypto market is starting to pick up a bit. I'm not going to make any predictions because that's suicide. So with that said, I wanted to get to you, Tim, because a lot of people might have noticed recently a lot of your videos being posted on the WAM channel. And I wanted to make sure that everyone knew, like, we were going to do an introduction, and then I came down with a flu. And it's actually really worked out really well because this whole time I'm like laying in bed, insanely sick. I still have the flu. And Tim's like posting all these videos, and we got all these other ones lined up. Really good interviews, really good videos and reports. And I'm looking forward to bringing that to everyone. That Hegna interview is coming up soon as well. Can you just tell everyone your background a bit and just tell everyone, you coming on here at WAM as a contributor, what they can expect?
Well, you can expect from me when I was going to scratch my nose, I accidentally poked out my eye, so now I'm like crying right now. But anyways, I am a certified financial planner. I was probably one of the youngest people in America to get that. That's the same designation or test that Geo Griffin sat for before he wrote the book Creature from Jekyll Island. But how I kind of fell into all this stuff is I was, I'm a millennial from New York, but complete opposite end of the spectrum of Ocasio-Cortez. And I was in a class that won the national competition on the Federal Reserve, and I mean our saying was "In Fed We Trust." And so I was definitely, indoctrinated into this whole world. I mean, there's other things I cared about in college. I didn't, it was just a class that I was taking. And, one day this guy tells me that the Federal Reserve is private. I'm thinking he's full of crap. And long story short, I find out about Creature from Jekyll Island, and then that whole, everything just kind of blew apart after that. And so then I started realizing, I'm like, if I didn't know that the Federal Reserve is private, and here I was having a Series 7 stockbroker's license, which actually dropped in order to kind of do what I'm doing now. Having a Series 66, different insurance licenses, studying for my certified financial planner exam. I think I already had the chartered retirement planning counselor designation at the time too. I'm like, if I didn't know this and I was in a class that won a national competition, I'm like, how the hell does anybody else know this? And so I felt like it was my mission to then spread this word about how, what was the big fire underneath my butt was when I realized if you have the very first dollar that is lent into the system had 4% interest on it. So how do you pay back so that at the end of the year one, you print $1, you then have to owe $1.04. Well, how do you pay back $1.04 with $1? You got to print another dollar and another dollar and another dollar. And so it's this high-tech slavery that you can never get out from underneath. And it essentially means that all of our kids and grandchildren are all these high-tech debt slaves. And so that is what really, basically kind of inspired me to start creating content about 3 years ago. And, the other part was I wanted to be able to document this ongoing financial collapse. But I have been a financial advisor since actually, coincidentally enough, I started the day Lehman Brothers crashed, September 15th, 2008. So, great. Welcome to the business.
Good timing.
Yeah, great. Yeah, great timing. And then, so I was with a company that, they had actually the best performing fund over the 5 years because they were actually pretty heavy into gold. And so then I left that company to go work for, not for LPL, but I started up my own firm inside LPL, had some other people underneath me. Things are going great. And then one day my good buddy, Ernest Hancock, he's the guy who actually created the Ron Paul Revolution logo. He had the first Ron Paul meetup in his backyard in either like 2006, 2007. And so he's like, hey, we got a bunch of rich crypto guys. How do they take their huge gains? So let's say you put, $1,000 in the Bitcoin early on, and now I've got 10 million. How do you actually take that and get it into the economy without getting killed on taxes? So long story short, I came up with various strategies, trust strategies where you can put your money into a trust, you get a huge tax break, the money then gets paid out to yourself, and then that money is then offset by the tax breaks. And there's all sorts of different shenanigans that, it's all legal, don't hate me, don't hate the player, hate the game. I didn't make it up. And so, I was trying to bring that to the crypto space. And then what had happened is the broker dealer that I was with, so I started working on this right before everything started going crazy. So right around the time of the fork back in August of 2017. So then as everything starts going crazy, my broker dealer then banned me, or 17,000 advisors were banned from talking about Bitcoin, recommending Bitcoin, thinking about Bitcoin. You weren't allowed to say anything about Bitcoin. And this was right before I was set to talk at Anarchaboca last year. And so I had to make a difficult decision to actually leave a job where I was, or it wasn't a job, it was a career where I had over 6 figures coming in. I had to leave that. Then the state of Arizona then held into my paperwork for most of last year, unemployed. So I'm a guy who's actually taken a lot of risk every single time when I could have, made it big. Like the original company I was with, I knew I had inside info that a lot of the top dogs were leaving, decided, I couldn't morally be with this company. Even they did a lot of things that were good, but, I was standing to make, hundreds and hundreds of thousands of dollars as a 28-year-old, and decided, what, I'm going to start my own deal. I really can't, some of the things you guys are doing, like you're limiting me to this little sandbox when the world is much greater. I know, a guy like yourself, you could have sold out and did, ICO videos for, tons and tons of money, and you didn't sell out either. So, and that's really one of the reasons why I gravitated towards you guys, is seeing, you weren't afraid of certain information. Because I've been asked to, be on places like Red State and Town Hall, and I'm like, yeah, like, you guys want to check out some of my other stuff and you want to see if you want to have me on there, and then that's an immediate no, or we're not going to get back to you after they see that. So now, long story short, I'm in a situation now where I've got a couple other business partners out of Boston, and what we're doing is we actually offer self-directed IRAs where you can do a little more advanced things within your retirement account. So you can have crypto where you hold on to your private keys. Probably the first financial advisor to actually roll that out in an advisory setup. I'm licensed with the 66, so I can actually provide investment advice. And so for people out there, another way to support the show is becoming a client of myself. What I want to do is be able to give back to the channel, and whether it's hiring, video editors, whether it's hiring, different managers to do different things. Because right now, Josh is out there with chicken running around with his head cut off of, plugging up every hole, doing every single thing. And really what we need him to do is focus more on the research and getting, different great interviews and bringing you guys great content and building out this entire platform and not doing every single little job. And so by working with me, it's another way to then help, spread things around. And, and you guys can go back and audit me from my, podcast going back, probably about, I changed platforms. So it's really going back 3 years, right around the time of the election. And then you can go back and audit my Facebook pretty much since Facebook came out, because I've been on there since 2004. I'm sure I'll be kicked off at some point. I've got a page that has right around, I think it's a little over 31,000 people following me. All of that came within the very first 2 months of my page being created. And then what happened was on November 17th, 2016, my page went from getting 1,200 new subs a day down to 0, where it's pretty much stayed at 0 pretty much ever since, because I'm constantly pissing off, a lot of the hardcore Trump people who, liked me for all my anti-Hillary stuff. And yeah, one of the thing I had made go viral, and this sounds absolutely crazy. I've shown Josh this, but I had, and maybe I can send him this file. I had a meme that I created that it was called Fake News List. And this was on November 16th, 2016. And so I'm not claiming to be the first person to string those two words together. What happened was this leftist, Melissa Zimdar's professor, came out with a fake news list. And it was basically, Zero Hedge and InfoWars and We Are Change and Liberty Radio Network. Everything that, we listened to, everything that wasn't a communist was labeled as fake news. That triggered me. That same day I put out my own fake news list. That went viral. That very next day, I went from 1,200 subscribers the day before to 0. I've been stuck there. So I know all about shadow banning, how that works. And that's why I wasn't going to try to build up a YouTube channel, because, I see what they do to Josh. I see what they do to other people. I saw what they did to me. And I'm like, you know what, I need to fight back. I need to, instead of trying to be a content creator, I need to start my own business over here, have that fund me. And then once I'm in a place to then go back to the other side, well, that time is now. There's things coming, whether it's, IPFS, whether it's, other systems where in the future, they're not going to be able to take us down. They're not going to be able to shut us up, and they're not going to be able to remove our content. And they're going to wish they had us in their little corral. They already had controlled 99%, but they weren't happy with that. They had to purge about 800 of us, do all this other crap. And they're really going to wish that they didn't mess with us, because, it's probably not going to be in play for the 2020 election. Not that it really matters anyway. Whoever gets in there, no matter who wins, the government's going to get bigger. No matter who wins, the interest rates are going to be 0. No matter who wins, the government's still going to, extort me for money. But, that's, a little bit background about myself, also, Ironman triathlete, probably done like 50 triathlons. I've brought someone back from the dead before. So interestingly enough, Sheriff Joe gave me the Maricopa County Lifesaver Award. So I actually have he must have done his, the background check on me with my different cop posts, but so I do have a picture of me and Sheriff Joe. So it's just, I've had my hand in a whole bunch of different things that are out there. And yeah, hopefully I'm not boring you.
Yeah, well, but I mean, that's what it's all about, though. Someone with passion and someone that actually cares what they're doing, and man of many, angles, ideas, passions, actions, things that they're involved in, and that's really important. And of course, yeah, I mean, it's probably the worst time in history to try and start a YouTube channel. But I mean, that's why it's good to have the ability to bring other people on that have a strong voice, that have a lot to say, onto a platform that's already developed to an extent, because we were started pre-2016. Anyone that started after 2016, it's really, really hard to get anywhere with their channel. So we got lucky. We got in there beforehand. Our first channel was March 2013, and I've been doing this since like 2006, and I've just watched YouTube go so downhill. It's incredible. And with the shadow banning lately, yeah, they just, in some cases,
they kicked Max Egan off. They gave Max Egan a 90-day suspension yesterday.
Yeah, they kicked him off for talking about New Zealand, and it's just I'm about to send Tim a list of all the things that we unfortunately cannot mention in a title, description, or tags without getting heavily shadow banned, age restricted, and that means none of our other info is getting to anyone. It's crazy, because that list just keeps growing, and it gets to that point where it's like, folks, we need to offload, but of course YouTube is the one place where it's not yet an echo chamber. I mean, every other place, every alternative is kind of an echo chamber, and we're trying to fix that. But for the time being, I do invite people to check out the Subscribestar page that we have for World Alternative Media, where $4.99 US a month plus will get you subscriber-only content that is not safe for YouTube, that will otherwise be taken down, and shadow ban all the rest of our content to the point where no one's seeing it. Because when we're reaching 1% of people, and sometimes less, of our subscribers, it's not good. Luckily, there's been a few things.
Wasn't it point one with a Tone Vays interview?
Yeah. Well, for the first 2 hours, we hit like 0.1% of the audience. It's so ridiculous. It's ridiculous. So I think it's important that we get on that and obviously do whatever we can to offload and focus on other media platforms, social media platforms, and also grow our voices louder, pump out more content, bring more people on, and allow for there to be more content out there for people to get the information they need, because we have a limited time left here on YouTube. But anyway, Tim, I really appreciate you joining us today. We are running out of time, but we will be doing much more reporting in the near future. We got many videos coming up. Tim has many independent videos coming up. We will be doing many videos together. I think he and John will be doing some videos while I'm in Africa and unable to post videos, because you can imagine, middle of the Sahara Desert, not the best internet. So I'm going to do my best, but probably not going to happen. So during that time, it's also very convenient for other people to be able to be posting on WHAM, and I'm really looking forward to what comes next. The whole idea of WHAM is a channel, not a show, so it allows us to diversify the information, diversify the personalities of people talking, the backgrounds, the information. It's so important. So anyway, Tim, thank you for joining us today. And until next time, this is Josh Sigurdson and Tim Picciott signing out from World Alternative Media. Find the truth, be the change.
Like what you see here at WHAM? Don't forget to check the links below. GoFundMe, Patreon. We can't do it without you. Any donation is very much appreciated, especially as we are so heavily demonetized and censored by YouTube, as these guys come in and flag all of our content as hate speech. The shadow banning is getting really bad, guys. Also, check our Bitcoin address right here on the screen or in the description below. We really appreciate it. And of course, check us out at the Red Pill Expo 2019. Of course, the great G. Edward Griffin and so many other incredible speakers will be there. Our link for that is below as well. And we cannot forget Mike Maloney's goldsilver.com, which you can also find in the description. One of the greatest market and monetary historians out there. We really encourage everyone to check that out. But until next time, this is Josh Sigurdson signing out from World Alternative Media. Find the truth, be the change.
I'm sure you have already changed people's minds in your young age because you're involved, and I like that.